I'm Michael Klibaner, head of Greater China Research with Jones Lang LaSalle, with your Q313 MarketPulse update. In the economic front, fears of a hard landing dissipated in the third quarter as we saw stronger economic indicators throughout the quarter foreshadowing the 7.8% year-on-year GDP number that we saw at the end. Nonetheless, from a property market perspective, relatively little has changed from prior quarters. Looking at the office sector, we still see relatively subdued demand, but also supply is lower than last year, and as a result, average rents have basically been flat in the third quarter. If we look at some specific market highlights, Shanghai saw an increase in new inquiries for lettable space, particularly from MNCs, and Shenyang, which is the only Tier 2 market we track that has single-digit office vacancies, saw strong rental growth. On the other hand, Chengdu and Beijing, where rents are falling, actually saw rents in the third quarter fall somewhat less quickly than they did last quarter. On the retail front, it's also a familiar story. Demand for space in prime locations has been quite good, particularly from new market entrants, whereas the brands that are already in the market remain relatively cautious with their expansion plans. Demand for space in peripheral locations is still fairly slow, and it is taking quite a long time for these new malls in suburban and peripheral areas to lease up. On the retail sales data front, we think actually there's room for optimism as the anti-corruption campaign nears its anniversary. This campaign began, as you may recall, last November when Xi Jinping and Li Keqiang came to power. And now the year-on-year data should start having an easier basis for comparison from December forward. Turning to the residential sector, in September, the market entered a seasonally strong period for transaction volumes, and we saw relatively strong growth, especially in the mass market. In the high end of the market, however, transaction volumes were slower, but year-to-date, developers have achieved better than expected sales, and as a result, pricing power has started to return, and you are seeing prices moving up fairly quickly. Developer sentiment is particularly strong in Tier 1 and upper echelon Tier 2 cities, and this can be seen most clearly in the premiums that these developers are paying in the land auctions. That's it for the third quarter. I look forward to bringing you our next update after Chinese New Year with the 2013 year-end wrap-up and a look ahead at 2014. Thanks for watching.